Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Our tactical trader Kevin Cook says he has 5 charts that you need to see, and I'm sure a few opinions along the way too. So let's bring them in here and get right to it. So what have you been cooking up in that kitchen of yours?
Yeah, let's take a look. We'll look at the indexes, but also some other interesting things. Here's Dan Zanger is a trading champion. This guy turned like $11,000 into $40 million in several contests over the years.
Man after my own heart.
When he shows a chart, I pay attention.
Sure,
right?
yeah.
And this is one that a lot of bears are looking at. The S&P is just climbing this wall, and it's incredible. It's getting very steep. There's a little bit of altitude sickness when you look at this chart. And he says, probability is we're due for a pullback pretty soon here, just based on being overbought, overextended. He shows the RSI on the bottom. Mm-hmm. Odds are, yeah. But many players have keep trying to short this market this month, and they get taken out every time. We had a lot of data this morning.
Yep.
Jobless claims was weaker. Chicago PMI was stronger. Market continues to try to chug higher. So tomorrow is a big jobs number. We'll see what the claims today, how they impact that number tomorrow.
Yep.
All right. Next thing I want to look at is this is very interesting. We have a birthday to celebrate. The Spiders, SPY, turned 20 this month. Okay. 20 years for the tracking ETF for the S&P 500. Now, an investment manager I follow put together a total return chart. What if you had reinvested dividends in the Spiders? Mm-hmm. He says, we talk about all these indexes making new highs. I've been pounding the table about the Russell 2000 and the mid cap making new all-time highs. The Dow approaching an all-time high. The S&P is still 65 points away from its all-time high. But he says if you look at it on a total return basis, the index is already at all-time highs. And this is what he's trying to show here. The blue line, SPY since 93, has clearly doubled. Mm-hmm. What if you'd reinvested dividends? And that's the red line, and well above a triple there, just based on that theme.
Okay. So obviously seems to argue for the power of dividend investing over time.
Absolutely.
What about other long-term trends on your radar?
So I wanted to, I'm trying to look at all the sectors from different angles, and clearly we know the consumer is 70% of the U.S. economy,
right?
And how they've been holding up. When we thought the consumer's not coming back in 2009 and 2010, and certainly powered through. And you look, here's the XLY, the consumer discretionary ETF versus the S&P. Look at that outperformance; it's incredible. The S&P is the yellow line, and this is a 4-year chart, a weekly chart. And 4 years sort of pinpoints the recession low of the market in March of 2009. Mm-hmm. So since the bottom, basically, the XLY has just trounced the S&P 500. And you look at the other sectors, industrials and technology beat the S&P by a little bit, but clearly staples, energy, utilities, and healthcare all fell under. Base materials a little bit under. Financial certainly a little bit under. Now let's take a look at another retail ETF that just blows my mind when I look at these returns. Again, S&P, yellow line on the bottom, and the XRT retail ETF up top. Just incredible performance. And this speaks to the power of the consumer, forging this economy ahead, and investors recognizing that retail stocks would benefit. When we look comparing, how is XRT different than XLY? XLY tends to hold like the big caps like Disney, Amazon, Starbucks, Ford, Home Depot, Nike. XRT can be a little more diverse. Right now in the top 10, there's like 4 automotive parts names. So, that's how they're a little bit different. It's probably more spread out, less mega caps in the XRT.
So based on the S&P chart and talk looming out there about pressure on the consumer and blah, 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 is there any concern about being bearish?
Yeah, pressure on the consumer. I should have talked more about that, we've got weaker, we had the consumer sentiment numbers, Michigan and consumer confidence. We had them to soar to new highs, new 4 or 5 year highs, and then they pulled back quite a bit here.
Yeah.
And the one thing we're watching is the impact of the payroll tax. right?
Right.
Everybody's getting 2% taken out of their check that they weren't expecting a few months ago.
Yep.
And how does that affect psychology? How does it affect spending? These are the things we have to watch. Mixed data this morning, but one real positive piece of data was that incomes were up for the consumer. So
Okay. That's good news.
yeah, I mean, if it's like, is this trend sustainable? That the consumer can continue to power this economy, and that this is where the outperformance is going to be. It's hard to take. It's hard to tell right now. One place that I look though is consumers who are also investors, and this is a chart from Bespoke Investment where they take one of the sentiment surveys from AAII, and they plot it against the S&P 500 here, and you can see how real peaks in bullishness tend to be tops in the market, the S&P 500 being the red line there. And so, how bullish did things get? Last week, this survey came in at over 50% bulls. Bears are like less than 25%. Well, we pulled back. So this is the chart from last week, a 3-year chart since 2009. And the survey today is only 48% bulls. So we're not at an extreme here where I'm worried about people being excessively bullish on the market. And this bad GDP read we had yesterday is going to get washed out. Money managers are looking 2 to 3 quarters ahead. And we just have to process, though, whether that lower than expected reading impacts these next 2 quarters. So
Well, the headline number was a little disappointing, but I understand that those internals in that report were a little stronger.
some of the internals were very good, yeah. And we know that the shifts in government spending will sort of balance out. So I'm still bullish here. Yeah, we're probably due for a 3% pullback, but I think that one will be bought strongly.
Okay, thanks for that. Kevin is our tactical trader, as I said at the beginning, and you can read more of what he contributes to Zacks.com on Zacks.com's homepage, of course. Link to it right off the homepage, and check it out frequently because he contributes written pieces frequently. With Kevin Cook, I'm Terry Ruffalo.